Hello everyone, and welcome to this presentation of Add These Two Techniques to Improve Your Candlestick Trading. Now in today's presentation I have a lot of information to give you that you can start using as early as today if you'd like, but let's get right down to it because there is a lot to cover today. Now first of all, we're going to be talking about candlestick patterns, and as you can see there are a lot of candlestick patterns to choose from. I'm going to be sharing with you this technique or these few techniques today which have to do specifically with engulfing patterns, okay? So this is just your standard basic engulfing, bullish and engulfing patterns. And for those of you who aren't familiar, just a real brief refresher course. A bullish engulfing pattern is a two-bar pattern, as you can see. Bar number one is usually a down day, all right, as exemplified here by the open to close lower dark body, and then bar number two is an up day, as exemplified here by the open to close hollow body or light body, okay? So what you're doing is bar number two's open to close range, not the entire range, but the open to close range is engulfing bar number one's open to close range, okay? And when you see patterns like this, you have a propensity for movement to continue upward. Now conversely, a bearish engulfing pattern is still a two-bar pattern, as you see here. And once again, it does not matter if these are 5-minute bars or monthly bars. It can work on any time frame, any market. But in this scenario, bar number one's range is from open to close is higher. So we close higher than the opening. And bar number two's range from open to close is lower. So what you want to see is the open to close range of bar number two totally engulf the open to close range of bar number one. Okay, if you see a situation such as this occur, well, odds tell us that we're most likely going to be going lower. Okay, so it's a great edge to have. We have used this in some of our other techniques before. Here's the only problem though. As we see in this older example, there is not that much consistency in trading candlesticks if you trade in the conventional wisdom way. In other words, as we see here in this example, we're going lower, and once we hit some type of bottom or support, you are met with a bullish engulfing pattern, which would tell us that price is probably going to start going up. And then this occurs, okay? It goes up for a few bars, but then it heads much, much lower. This is the problem with the standard way in which people use candlestick patterns. There's not a lot of consistency in them, but I'm going to share with you two great techniques today that you can apply to your trading that will greatly increase your odds for success when trading candlesticks. Okay, welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading, and as you've just seen, we are an educational company. We're not about just force feeding you signals and telling you what to buy and what to sell. We really want to educate you by giving you tips and techniques that I've accumulated in my nearly 40 years of trading. I started out trading on the floor of the Pacific Stock Exchange just about 39 years ago. I was on the floor for 16 years, and 9 of them I was a specialist. A specialist is simply a trader that made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular issue, let's say IBM, you had to go to the trader who specialized in that. So I made markets in roughly 50 stocks. I traded through the crash of 1987 and the bull market that followed. And I've been involved in just about every market environment imaginable. I've traded straight down, straight up markets, quiet markets, crazy markets, volatile markets, trending markets, and rangy markets. I've traded just about every strategy, system, and technique you can imagine as well. So through my experience of nearly 4 decades, I know what works in terms of consistency, and I know what doesn't. Sure, everything will have, its day every once in a while. We'll have 1 or 2 great trades. But remember, we're talking about consistency. And as an educational company, my goal is to teach you so that you can ultimately go out on your own with this level of consistency. We're not about simply force feeding you signals and telling you what to buy today and what to sell today. Now, granted, we provide our students with strategies and techniques that do generate signals. But remember, once again, it's up to you whether you want to take them. It's up to you whether you want to trade it conservatively or aggressively. It's up to you whether you want to trade it on a 5-minute bar or a monthly bar. So we're not trying to tell you what the perfect time frame is. We're not trying to tell you what the perfect market is. We just give you these high probability techniques, and you can apply them to wherever you would like. It's up to you. This, in my opinion, is the only way traders become consistent, by making their own decisions. So this is what we do at Specialist Trading, and you'll see how much we really believe in that by the education I'm going to be providing for you today. Now, before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you some performance results with a lot of chart examples with these two particular techniques as applied to candlestick trading, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you that. And so as you're taking a brief moment to view the disclaimer, I would also like to invite each and every one of you to follow us on Twitter. If you haven't done so already, you're missing out on a lot, because each and every day I post anywhere from daily financial tidbits, little pieces of wisdom about how to trade or different things I've accumulated along the way, to actual signals that some of our strategies have generated. In fact, just this morning, or actually last night I should say, I tweeted a signal that one of our strategies generated in the markets, giving a buy signal. And so most of our students who took that signal in its standard basic format have a nice profit so far going on today. Remember, once again, we provide you with this high probability strategies. It's your choice how you, in which market you want to decide to trade them. It's up to you. So you can follow us on Twitter at the handle there at SPCLSTTRADG. Now the information is rather limited because of the way Twitter is formatted. So if you'd like to get more detailed information, my sister site, which is Pro Trader Strategies, has put together a Facebook page. So simply log on to Facebook, Pro Trader Strategies, and you'll see a lot of more detailed information, such as videos, educational videos, and more information about myself and what we do, as well as Pro Trader Strategies. Okay, so lots of ways to find out how and what we do, and lots of ways to find out more about myself as well. Okay, now as I stated, we are first and foremost an educational company. It's my belief that the reason why most traders fail is because you are relying on someone or something else to tell you what to do. I mean, just think of it. Look at your own trading. How many of you cannot make a decision until some news numbers come out? Either it's some jobless claim or some economical report, or it's something that's with your particular issue that you're trading, some earnings announcement. You have to wait until that news comes out. Or let's say you're watching a multitude of indicators and you absolutely cannot make a decision until they all cross over. Or what a lot of people like to do is watch the institutions or watch volume, and they can't make a decision until everything lines up. Basically, what you're doing is you're relying on something to tell you what to do. And this, in my opinion, is a recipe for disaster. I say this from firsthand experience because that's exactly the way I used to trade nearly 40 years ago. And guess what? I couldn't make a dime. My first 2 years on the floor were very difficult. I was basically just trading water for nearly 2 years. And I was doing most likely everything that most traders do. Waiting for news, tons of indicators, listening to trading gurus, figuring out what they're telling me what to buy or sell. It wasn't until my mentors, put a new mindset in me, telling me to just rely on what I saw was happening in the market, and they gave me the tools and techniques to follow, which were really rooted in simplicity. So this is my goal, to teach all of my students and members the same edge that was able to turn my trading around. And remember, as I say here, my goal is to teach you, not to force feed you signals and have you come daily to find out what to buy or what to sell, but to teach you how to trade with the same edge that turned my trading around, so that you will ultimately be in charge and empower your own trading. Okay? Now, before we begin, I know a lot of you probably haven't attended my presentations before. If you happen to have questions, kindly wait till the very end of the presentation. I know a lot of times if you wait for the next slide, many times the question will be answered. So if you have any questions, please wait till the very end, and I promise I'll answer each and every one of them. I will answer just one right now, and that's the most popular question, and that is this being recorded? Yes, it is. We record all of our weekly presentations, so kindly go to Pro Trader Strategies and ask them for a link if you're having technical difficulties or if you have to leave early, and they will provide you with a link to this recording. All right, so why don't we begin? And thank you once again for holding off till the end to ask questions. Now remember, we showed you this chart earlier where we had a bullish engulfing pattern circled in green there, and conventional wisdom tells us that we're supposed to stop and go up, and it didn't. In fact, it went much, much lower, okay? This is the problem with many ways of trading, not just candlesticks, but with conventional wisdom, because there really is no consistency in much of the things that were rooted in, that were taught us. Anything from, just deciphering what the news is to volume to actual patterns such as candlestick patterns. So They do have some, brief edges in them, but we have to, go a little bit deeper and really refine these techniques. So that's what I'm going to share with you today on how to use these same candlestick patterns, but refine them and edit them a little bit and alter them so that we will have that added level of consistency. All right, so we always ask ourselves, how can we achieve more consistency in our candlestick trading? Well, here's what I'm going to be sharing with you today. We're going to talk about engulfing patterns. This is the topic we're talking about today, but we're going to talk about a specific type of engulfing pattern, not the one I just shared with you, but we're going to edit it a little bit, and these are engulfing patterns plus one. Okay, this is, a lot of people don't know this. I was actually taught this pattern on the floor over 30 years ago, and has really helped me tremendously to really add consistency to my candlestick trading. Now we're only going to be focusing on engulfing patterns today. So this is your standard, once again, your bullish engulfing pattern. It's a 2-bar pattern. An engulfing pattern plus one simply means that we want to also engulf one more bar. So as you can see here, we have bar number 1, bar number 2. The engulfing bar is engulfing the previous bar, but it's also engulfing the open close range of one more bar. Okay? Now, it does not matter if this extra bar is an up day or a down day. It absolutely makes no difference. All that matters is that we are also engulfing its open to close range. Now, the reason we call it plus one is because that's the minimum. All right, we want to have a standard engulfing bar plus one, okay, and a standard engulfing pattern plus one. But we can have, plus 5, plus 10, plus 20, and I'll show you some examples of that. But when you see this pattern, it gives you a higher level of consistency. So we're not just going to be taking standard conventional engulfing patterns. We're going to be only trading engulfing patterns plus one. Now the same thing works in the opposite side. If we're looking to go short now, this is your standard bearish engulfing pattern, okay? Bar number 2's downward range engulfs bar number 1's upward range, but we want to also engulf one more. So as you can see here, we're engulfing the pattern right here plus one. And once again, it absolutely makes no difference whether we are an up day or a down day. In this example, this was an upward day. But it doesn't matter. All we want to do is engulf the open to close range of another bar. Now that is the minimum. We can have an engulfing pattern plus 10, plus 20, plus 30. It absolutely makes no difference. So if you see this pattern or the upward engulfing pattern plus one, you will have a much, much higher level of consistency that is going to be headed in that direction. So let me show you some examples of this engulfing pattern plus one for buying as well as selling. All right, let's look at RAI here. As we can see here, this is February coming into March. All right, the stock was going up, and then we were met with a bearish engulfing pattern. This is just your standard bearish engulfing pattern. Remember, we talked about consistency. Conventional wisdom would tell us that, well, you've got to go short. We have a bearish engulfing pattern right at the top of that, rally, so most likely we're changing direction. Well, after that bearish engulfing pattern occurred, we went down for about a point, but that was it. And then we didn't really go down much further. And then on top of that, we were met with a bullish engulfing pattern. So which one do we take? All right, which one is more valid than the other? Obviously, the first one didn't work out too well. Well, as we see here, this is a bullish engulfing pattern plus 4, because we not only had the standard engulfing pattern, but we also engulfed 1, 2, 3, 4 more bars. So as you can see here, this was a bearish engulfing pattern originally, but that's all it engulfed. That's the prior bar. So there's really no consistency there. The more bars you engulf, the higher your level of consistency will be. And as you can see here, we gained 4 points in 3 weeks. So that's the trade you should have taken. Not the first downward bearish engulfing pattern, but the bullish engulfing pattern plus 4. All right, let's look at this older chart of SYY. The reason why we're showing you this is because of the number of days you can include. Now, someone looking at this would say, well, Steve, we're just going sideways. There's no trend. I'm not going to do anything. Well, we don't care about that. That's just, once again, conventional wisdom telling you how to trade. What we're looking for are bullish engulfing patterns, and we have one right here, okay? Now, that's your standard bullish engulfing pattern, a 2-bar pattern. But we can also see that it is a bullish engulfing pattern plus 21, because we are engulfing the range of 21 more bars within this, okay? So this is telling us that we have a very high level of consistency that we are going to be going up. And on the very next bar, guess what? We go up 5 points in 1 week. All right. Now, it doesn't tell you how strong the move's going to be. It's just telling you how consistent it is to take that trade. All right. If you just have a standard bearish or bullish engulfing pattern, there isn't a lot of consistency there. But if you have a bullish engulfing pattern +1 or more, you have much better consistency and a higher probability that that trade's going to work out. How about VLO? Okay, someone looking at this would say, well, Steve, this is 3 or 4 weeks here. We're basically going sideways. There's not a lot of information. I wouldn't have any idea what to do. Well, we're looking at bullish and bearish engulfing patterns. Here's a bullish engulfing pattern, right? Now, conventional wisdom would tell us to take that trade, but it's just your standard bullish engulfing pattern. So we're not going to take that trade because it's just we haven't found that level of consistency. So we would bypass that. And next we're met with a bearish engulfing pattern. All right. So should we take this one? Well, yes, we should, because that is a bearish engulfing pattern +13. You see, we're also engulfing not just the previous bar, but 13 other bars, the open to close range of 13 other bars. So this is a higher level of consistency than the previous one, and VLO dropped 14 points right off the bat, coming into February. Now, as we see here at the very bottom of that move, what do we have? Well, we have another bullish engulfing pattern +1. As you can see here, even though we have all up days, bar number 2 range totally engulfed bar number 1 plus another bar. So that's a bullish engulfing pattern +1, and we went right back up 10 points. Now, had you missed that, don't worry. Market usually gives you more and more signs. Here's another bullish engulfing pattern, as you can see here, +1. Bar number 2 engulfs bar number 1's range, +1. All right? So it's telling you that there's a high level of consistency, that we're going higher until we get to this point where we now have a bearish engulfing pattern. Bar number 2's range engulfs bar number 1's range, +1. So now most likely you should either get out of your long, or if you're more aggressive, go short. And we started to go up until we took this snapshot where we're headed lower. That was in VLO. And this is a very current chart up until this week. How about TXN? Okay, just off the information given, what do we see here? We have a bearish engulfing pattern. Okay, now will we take this trade? Well, conventional wisdom would tell us to take it just based off the 2 bars. But we want to have a higher level of consistency, and we find that we do. We have a bearish engulfing pattern +2. We not only engulf the previous bar, but 2 more bars. So this is telling us this is a high level of consistency trade to go short, and we drop 8 points in the next 2 or 3 weeks. See how simple this is? Do you see how when you have these +1 patterns in your belt, how you can increase your odds for consistency? You don't have to rely on news coming out. You don't have to rely on some trading guru on TV, or some Elliott wave pattern, or some have to figure out what all the institutions are doing. I mean, why overcomplicate your trading with those things that actually show no levels of consistency either? All right. Just look at techniques and tips that have stood the test of time that will give you higher odds for success in terms of consistency. All right, so Texas Instruments fell down 8 points, and now we're met with a bullish engulfing pattern +1. You see here, here's our bullish engulfing pattern. Bar number 2's range engulfs bar number 1's range, as well as 1 more bar. So if you were short, this is exactly where you should cover. And if you were more aggressive, you decide to go long. And then we went up 10 points coming into this week. How about VRX? Okay, now we don't just have to look at daily bars. We can look at weekly bars. This can give you some type of trend direction. Okay, we can use this to decipher what we feel the trend is going to be. So even if you don't want to trade this on a higher time frame, you can figure out what to do on a lower time frame if you like to trade that way. As we see here, looking at this, we initially have a bearish engulfing pattern right here, okay? But it's just a standard bearish engulfing pattern. So we wouldn't have taken that. Even though it would have worked out, that's okay. We're looking for high consistency setups. And then we're met with another bearish engulfing pattern right here. Now this one is not only a bearish engulfing pattern, but it's also a bearish engulfing pattern +1, 2, 3. So this is the trade we would take, or if we were not going to, trade a weekly time frame or trade puts, on a longer term time frame, we could simply say, well, listen, this is a longer time frame, and this is kind of an overall market directional tool, I'm going to be out of this stock, or I'm not going to even consider buying this because the weekly chart is giving me a sell signal. And as you can see, the stock fell 170 points in 6 months. Now, obviously, there was some news about the company that happened that took this stock down tremendously, but you know, everything we need to know and everything we listen to is in the chart in front of us. We don't concern ourselves with news. We don't concern ourselves with things that are too subjective. Some person can hear a news event and say, wow, that's rather bullish. Someone else can hear the exact same news event and say, no, that's bearish. So we want things that are cut and dry. When you see a bearish engulfing pattern +1, that's cut and dry. It's telling you that that's a high consistency setup to go short. How about Oracle here? Now this is where we go into where we have to, ask ourselves, well, which trade do we take? Okay, is there a way to increase our odds? Because as we see here in this chart in March, we have a bullish engulfing pattern right here. Bar number 2's range engulfs bar number 1's range. But we also engulf 2 more. So this is a bullish engulfing pattern +2. All right, so we want to be long, right? So that's a high level of consistency in that setup. But we go for about 2 or 3 more days and we're met with a bearish engulfing pattern +1. Okay, so I guess the market is switching gears here, and it's telling us that we're no longer going up, now we're going lower, because after all, it does meet all the requirements of a bearish engulfing pattern +1. So you decide to exit your long, you take a small loss, and now you're fully short, and look what happens, okay? This will happen from time to time because nothing is guaranteed or 100% foolproof. If anyone tells you that these things work 100% of the time, you should run because, it's just like saying no one hits a home run every time they come up to plate, or no actor has a blockbuster movie every time they're in a movie, or no basketball player makes a basket every time they shoot. It's just not the way things happen. Not every setup is a winner. But there are ways to increase our odds even more. So how can we increase our odds for success even more with these +1 patterns? Well, we apply a tool that confirms the candlestick pattern. All right? And you've heard me speak about this before. The best confirmation tool I know of is our proprietary tool, the PET-D. It's a proprietary algorithm I was introduced to roughly about 35 years ago on the floor of the exchange that I've continued to use virtually every day for nearly the past 35, 40 years. Okay? What it is a directional tool. Once you see bars that have a green coloring, that's telling you that the short-term trend is up. And bars that are colored red are telling you that the short-term trend is down. So it can be used as a directional tool. Just probably the best tool I know of telling you what the short-term direction is. But we figured out how to use it even more different ways, and one of the best ways is to confirm a pattern. So how does it do this? All right, so let's look at bullish engulfing patterns once again. We're only going to buy if the engulfing bar, remember that's bar number 2, is colored green. So that's all we need to know, okay? We can see a bullish engulfing pattern +10, but if that second bar is not colored green, we're not going to take it, all right? So that's the bullish engulfing pattern confirmation. And as we can see here, let's look at that older chart of SYY again. Here is our bullish engulfing pattern. Now we add the PET-D, and as we can see, what is the color of bar number 2? Bar number 2 is green. So this has given us the green light to take it. Now added with the consistency of being a bullish engulfing pattern +21, we have an extremely high probability trade here. And that's why the stock shot up 5 points in 1 week. How about the other side of the coin? Bearish engulfing patterns. Well, conversely, we are only going to sell if the second bar of that pattern, bar number 2, the engulfing bar, is colored red. So it doesn't matter if every bar before that was green. We just want to see that bar number 2 is colored red. So let's look at this chart here in Fossil. It's an older chart of First Solar. There's a bearish engulfing pattern. Okay? Now, how do we know whether to take that? Well, we add the PET-D. In order to go short, bar number 2 needs to be colored red. And is it red? Yes, it is. So that's a higher level of consistency. But at the same time, we also have a bearish engulfing pattern +7. So we have 2 techniques here that are really screaming that this is a very high probability trade to take to go short. So you would have taken that and the stock went down. Okay, it went down rather nicely. It wasn't a tremendous sell-off, but it continues to go lower. And as you can see many times, even while the stock continues to go lower, you're met with other signals. Now, coming into the end of October, guess what? There was another bearish engulfing pattern, +5, and bar number 2 was colored red. So once again, you have two high probability techniques that are telling you that this is going to be a very consistent trade. And as you can see here, if you had stuck it out until the middle of November, the stock would have had a very nice drop. Obviously, some news came out, but remember, we do not listen to news because everything we need to know is in the chart in front of us. The chart is always telling us what we need to know in advance. The only trouble is most of us are taught to wait for news, to wait for what the institutions are doing, to wait for a ton of indicators to cross. We don't need to do that. We don't need to overcomplicate our trading. What we need to do is focus on what the market is telling us. The trouble is we've never been taught that. So I was lucky enough to be taught that by my mentors nearly 40 years ago, and this is what I teach to all of my students, the same exact things that were able to turn my trading around. So you see here two great techniques that will greatly increase your odds for success. All right, so let's look at some more stock examples. You know the techniques now. We want to see either bar number 2 be colored green if we're going up, bar number 2 be colored red if we're going down, and we also, that's not enough just to take the trade. We also want to see a +1 engulfing pattern, okay? So now that we have those two techniques in place, we are really going to be increasing our odds for success. Now remember, once again, these are not systems, okay? A system means that you have to trade this the exact same way each and every time. This is just a high probability setup. We teach you in the course probably 3 or 4 ways in which to enter, 3 or 4 ways in which to exit, 3 or 4 ways to place your stop, okay? That's not a system. A system means you have to trade it the exact same way each and every time. And because you trade it the same way each and every time, you can come up with statistics. Well, we don't believe in that because we believe everyone needs to trade it according to their own needs. In other words, someone can have a very small risk aversion. They don't want to risk a lot. Okay, so they're going to trade it conservatively. Another person can say, no, I don't mind taking a lot of risk. I want to, take as much risk as possible because I want to go for the big move. Okay, they're going to trade it entirely different. They'll maybe have a different entry or a different stop placement and different exit placement. There are a million and one ways in which to trade it, so there's no way to have statistics on all of the different ways. And there shouldn't be. Because remember, we teach and trade strategies, not systems, okay? Systems basically, once again, take you out of the market. They are telling you what to do. All you basically do is blindly enter the orders. As I stated in the very opening statements, we do not believe in that. We want you to be a part of the process, to make your own trading decisions. That is the only way you will become a consistent trader in our philosophy. All right, so let's look at some more examples here for stock traders. Now, if we look at that example again in Oracle, remember where we had difficulty, we originally went long and then went short, okay? Well, which one would we have taken now that we have this extra technique of the pet D added? Well, we see here that on the first bullish engulfing pattern, bar number 2 is green. And on the second pattern, which is a bearish engulfing pattern, in order to take that, bar number 2 should have been red. Well, guess what? It's green. So we never would have taken the sell signal. We would have taken the first signal, which is a bullish engulfing pattern +2, and remained in that and gained 4 points in 2 weeks. So you see how the pet D would have kept us out of the second setup. How about HRS? Okay, we have a standard bearish engulfing pattern. Okay, we're not going to take it just because conventional wisdom tells us that's a high probability pattern. There's no consistency in just using the 2-bar pattern. It doesn't work. Every once in a while you'll get winners, but most of the time it's like that first example. You'll sell and then it'll go straight up, or you'll buy and then it'll go straight down. We need a little bit more assurance. So let's add the pet D. And the pet D, as one of our techniques is saying, it's okay to sell this because bar number 2 is colored red. But we also want to add that first technique, the +1, and we see that this is a bearish engulfing pattern +9. Okay? We not only engulf the prior bar, the previous bar, but 9 more bars. So this is a high probability trade to go short because we have a lot of consistency here. And the stock dropped 14 points in 1 month, okay? You see how simple trading is when you just listen to the market instead of all this noise that's going around that most of us, sorry to say, pay thousands and thousands of dollars and there's no consistency in it. SHW, we're met with your standard conventional bullish engulfing pattern, but we need more than that. We need the pet D to color bar number 2 green. So we add the pet D. Guess what? Nearly all the bars are green. So this is a good sign. But we also need it to be a +1 setup as well. And we do the count back, and it's a bullish engulfing pattern +3. So we have two techniques giving us a high level of consistency, and stock went up 30 points in 3 weeks. Okay? QCOM, okay, a bearish engulfing pattern right at the top of this move, but that's not enough to take it. We need to confirm it. Bar number 2 needs to be colored red. We add the pet D, and all the bars going up were green except for bar number 2 in that bearish engulfing pattern. So this is a good sign. We have one technique that is confirming this. But we also need to see if it's a +1 technique, and it is. It's a bearish engulfing pattern +1. So we have the confidence to go ahead and take this trade, to go short QCOM, and it dropped 12 points in 3 weeks. Now, we don't just apply this to stocks. This is not just a stock technique. We can apply this to any market, any time frame. Crude oil. We all know that crude oil has been going lower. If we look at crude oil all the way back to December, we see here that we have the pet D already added. And if we look for bearish engulfing patterns, well, there's one right here. And it is confirmed. That is a solid bearish engulfing pattern that is confirmed by the pet D, because pet D colored bar number 2 red. And at the same time, if we use the technique I just revealed to you today, the +1, it's a bearish engulfing pattern +1, because we're also engulfing another bar. So with those two levels of consistency, we see here that crude oil dropped 18 basis points in 2 months. All right. There's no reason to look at news or figure out what's going on economically across the world. It doesn't matter. Everything you need to know is in the chart in front of you. We just, for some reason, never want to listen to that. We always want to listen to some trading guru on the internet or on the webinar. You know, he knows what to do, so I'll just follow him. That's why 80% of most traders fail. Now we can also look at a monthly chart of bonds here. Okay, this is a monthly chart of U.S. bonds going back to 2013 in May. We see here that we have a bearish engulfing pattern that is confirmed by the pet D. Bar number 2 is red, and at the same time, it's a bearish engulfing pattern +3. Okay, we engulfed the previous bar +1, 2, 3 more bars. All right, and look what happened. From May all the way into December of that year, we went lower. Now coming into 2014, what do we have here? We have a bullish engulfing pattern, and bar number 2 is colored green. So this is a high probability that we're going to be going higher because it's confirmed by the pet D. But we also see that it's a bullish engulfing pattern +5. So look what happened. Bonds went up all the way from the beginning of 2014 all the way up to the end of the year of 2014. All right. Now, even though we had a large drop off here, we have another bullish engulfing pattern that is confirmed by the pet D just this past November, December, and it's a bullish engulfing pattern +2. So bonds should continue to go higher. Is it guaranteed? No. But this is a sign that you could use this as a directional tool to see where bonds are going to be going. How about the E-mini? All right, an entirely different market, entirely different time frame. Let's start out with an older chart going back to October of last year, because a lot of people don't recall, but we had a really nice run-up coming into the end of the year in the markets. So if we look here, we are met with a standard bullish engulfing pattern, and it is confirmed by the pet D. And it is a bullish engulfing pattern +1, and the E-mini went up 160 points in 1 month. That roughly transfers into $8,000 per contract, per one contract you had. Now we're not saying that everyone would have been in the trade that long, but we're just showing you how much room you had to move with this level of consistency in your favor. All right, so that's a daily chart. Let's look at a 10-minute chart just a few weeks ago, actually just about a week and a half ago. This was on the 31st of March. This is a 10-minute chart, and someone just looking at this 10-minute chart would say, well, not much is happening. We're just basically, we opened up and we're just kind of going sideways. But if we look here, what do we have? We have a bearish engulfing pattern, but that's not enough to take that trade. We need to confirm it, and bar number 2 is colored green. And at the same time, we have a bearish engulfing pattern +3. So this was a strong signal to go short on a 10-minute time frame. That's all we're concerned about. We don't have to look at a higher time frame to tell us what to do. Only look at the chart in front of you. And as you can see, the E-mini fell roughly about 6 points in the next couple of hours. Okay. Now, if you were a more aggressive trader, we have students that are more aggressive that like to hold positions overnight if they feel strongly about it. Remember, once again, it's up to you. That's why these are not systems. A system would tell you where to get in, where to get out. Strategies give you the option to decide if you want to hold out for longer, if you want to trade multiple contracts, if you want to get out with a quick gain. It's up to you. Let's just say you decided to stay in longer. Why? Well, because you have a bearish engulfing pattern +3 here, right at the very end of the day. So that's telling you that, hey, at the very end of the day, the market's telling you that most likely it's going lower. So you could have gone short some more of the contract, the E-mini contract, or you could have stayed short, and guess what happened the next morning, okay? E-mini gap down. So you had nice 10 points in about 24 hours, okay, or roughly $500 per contract. Obviously, some news came out or something happened overnight that caused the futures to gap down lower. Did we know about that? Did they call us up? Did the CME call me up and say, Steve, tell your students to go short? No, the market told us. The chart in front of us tells us. Here's a 2,500 tick bar chart, just to go down even smaller time frame, and this was April 1st. This is not an April Fool's Day joke. This is an actual setup, and many of our students took these trades. Looking at this, this is just the first couple of hours of the day here, starting roughly at Pacific Coast time at 6:30 all the way going into 8:30. Okay, for the first couple of hours of that particular day. This was just last Friday. Now we gapped down, okay, that was the gap down. We gapped down much stronger. Now on the 10-minute time frame, you most likely would have covered your short. If you're gone to a 2,500 tick bar, well, what do we see here? We see here that we have two bullish engulfing patterns. But that's not just enough to take those. We can't just rely on conventional wisdom because it doesn't mean anything. You know, there are a million cases where I can share with you bullish engulfing patterns where the issue, the future or contract went straight down. So we need more confirmation. Well, in order to go long, the PET D needs to color both of those bars, bar number 2, green. So we add the PET D, and guess what? They're both colored green, okay? But if we want to increase our odds for success, we want to see engulfing patterns +1. And the first setup is an engulfing pattern +8. The next one is an engulfing pattern +3. So had you taken either one of those, you roughly would have had about a 16-point gain or $800 per contract in just 2 hours, okay? Once again, trading is simple when you listen to only one thing, and that's the market. When you listen to too many other things, when you're following too many indicators, when you're following too much news, when you're waiting with bated breath on every earnings announcement or what some guy's going to say in the chat room, that's where your trading suffers. Keep it simple. This is the same thing my mentors taught me, and that's where you get on that road to consistency. Lastly, let's look at the Forex markets, okay? Because I know we have currency, we have a number of currency pair traders. Nothing changes because we're going into an entirely different market or time frame. We use the same setups here. Here's a daily chart of the Canadian dollar. This is in November and December this past year, and we have two bullish engulfing patterns. Normally someone would say, well, those are buy signals, but that's not enough for us. We need to confirm these, okay? So we add the PET D, and both of those scenarios, bar number 2 is colored green. All right, so that's given us some confirmation. But we also want to see a +1 pattern, and we have a +2, and we also have a +8. So these are telling us that the Canadian dollar wants to go higher, wants to go way higher, unless and until we're met with some type of a sell signal that's confirmed. So it would be wise to be long the Canadian dollar. This was at the very end of November of last year. Wouldn't you have liked to have been able to trade these setups, having the PET D and knowing about engulfing patterns +1? That's basically about $14,000 in just 2 months per contract. And don't worry if you miss it, because once these big trends happen, many times they will produce more signals, as we see here. Coming into the year in January, well, guess what? It was giving you one more chance to get in because a bullish engulfing pattern +5 was generated. Here we have the 2-bar pattern. Here's the engulfing pattern. Bar number 2 is confirmed. It's colored green. And it's 1, 2, 3, 4, 5 bars more that it's engulfing. So look what happened after that. How about a weekly chart? Okay, now I'm showing you this chart once again to show you that we are all about consistency. What does consistency mean? It means basically 2 steps forward, 1 step back. That 1 step back means that from time to time we will have minor losses. I'm not going to sit here and tell you that every one of these setups works. Even though they have a high level of consistency, we will have minor losses from time to time, regardless of the market, regardless of the time frame. The beauty of these added techniques, though, is that you are many times able to recoup your losses, often on the next setup. Recoup the loss and then even more. Let me show you what I mean here. This is a weekly chart of the euro dollar going back to actually this was in 2014, actually, all the way back to April of 2014. Now we have a bullish engulfing pattern. Here's the engulfing pattern right here, the 2-bar pattern, and bar number 2 is confirmed by the PET D. Plus we're also engulfing one more bar. So that's a bullish engulfing pattern plus 1. So this is a very high probability setup to go long the euro dollar on a weekly basis. But as we can see here, the next month, nothing really happens. In fact, we're actually losing a little money. But what else happens here? Well, we also have a bearish engulfing pattern. Okay? Now, at the same time, we have a loss in our bullish engulfing pattern, but the bearish engulfing pattern is confirmed by the PET D because bar number 2 is colored red, and at the same time, it's a bearish engulfing pattern plus 2. We're not only engulfing the previous bar, but 2 more bars. So we exit out of our initial long trade with a loss, okay? This is the consistency we're talking about, and we change and switch gears to go short on a weekly time frame, and it makes all the difference in the world. So you would have had 3,000 pips in your favor on the downside coming into 2015, in the middle of 2015. You could have easily recouped your loss, your original loss, and made a little bit more. This is what we talk about, and this is what we strive for at Specialist Trading. We're not going to be winners on every single trade. It just doesn't happen all the time, and it's not natural. It's just, like I said, not every basketball player makes a basket on every shot. Just not the way life is. But what you're trying to do is have this added level of consistency in your trading, and this is what these 2 techniques provide. And if you missed that, guess what? At the beginning of 2015, you had a second chance to get in with a bearish engulfing pattern plus 2. Lastly, let's look at a monthly chart just to show you that we don't have to change anything because we're in a different market or we're looking at a different time frame. Here's a monthly chart of the dollar yen going all the way back to 2012. All right, we have a bullish engulfing pattern, 2-bar pattern, and bar number 2 is confirmed by the PET D because it's green. But at the same time, we have a bullish engulfing pattern plus 1. All right. Now, even though it's just 1, that's given us more level of consistency than just a standard bullish engulfing pattern. So if you were a long-term trader in currency pairs, you would have gone long the dollar yen roughly in September or October of 2012. And it would have paid off handsomely because that's 4,500 pips coming into this year in the dollar yen on a monthly time frame. Okay, it's $45,000 per contract. Once again, we're not saying that you would have stayed in there that long, but that's how much you had to work with in your favor. And the beauty of a strong market that is oftentimes projected with these setups is that it will give you second chances. So if you missed the first one, just as the euro dollar went down and gave you another chance, the dollar yen gave you another chance as well in May of 2014 to go along with a bullish engulfing pattern plus 1. All right, so before we go to questions and answers, let's recap. All right, first of all, engulfing patterns plus 1 have a higher level of consistency than your standard bullish and engulfing patterns. In fact, I wouldn't even trade your standard bullish and engulfing patterns and bearish engulfing patterns. There's really not a high level of consistency there. As I showed you in that first example, every once in a while they will work, but oftentimes you will see examples where you get a perfect setup to go long and it goes straight down, and vice versa. So we don't want to trade that way. We don't want to, have a couple of nice winners and then give it all back. Trust me, I went through that for the first 2 years of my trading life, and it was extremely discouraging. And I know many of you probably are in the same scenario right now. So we want a higher level of consistency. How do we add to that with the bearish engulfing patterns? We have the plus 1. You all should know how to do that. Remember, a plus 1 simply means you have a standard engulfing pattern, but you also engulf another bar, plus 1. That's your minimum, okay? The open to close range. We're only concerned about engulfing the open to close range. It doesn't have to be the entire top of the wick to the bottom of the wick, just the open to close range. That's all that matters in engulfing patterns, okay? But that's not enough. We only want to buy or sell candlestick patterns that are in sync and confirmed by the PET D, all right? Because the PET D is a fantastic, phenomenal confirmational tool. I use it each and every day. I used it for trading today, this morning. It confirms what you want to do. The market was heading lower this morning, and then it confirmed a buy signal when it started to go up with a green bar. So I took the setup. That's, you know, I'm not only preaching this, I'm also using this in my own personal trading because it really increases your odds for success. So only buy or sell candlestick patterns. It doesn't matter if they're bullish or bearish engulfing patterns, any candlestick pattern that is in sync with the PET D, meaning that the PET D is confirming it. So if you get any type of bullish candlestick pattern, that should be colored green. Any type of bearish candlestick pattern, it should be colored red. You will really increase your odds for success that way. Now, important points to remember, because I'm sure a lot of you are probably asking this. Every time I do this presentation, about once or twice a month, I always get these same questions. Steve, where do I exit? Where do I enter? Please, this is not a complete strategy that I just gave you. I just gave you fine-tuned points for entry. I just gave you really high probability setups, okay? We did not talk about entry signals. We didn't talk about advanced entry signals. We didn't talk about stop placement. What if you were wrong? Where would you get out? We didn't talk about exiting. How do you exit? Are you going to try and stick it in as long as you can, as many gains you can possibly squeeze out, or are you going to get in and out quickly? There's no right or wrong answer, but we didn't talk at all about exits. And then lastly, and most importantly, we never said a word about money management. How many contracts or futures should you be trading? How many shares? All right. How much risk should you have in that particular trade? These are all extremely important pieces of the puzzle that we didn't cover. But guess what? They are covered in our courses. So this is what we're offering you today. We are offering one of our best candlestick courses, which is strategy number 5, along with the PET D tool. We're having a nice discount and a nice offer for all of you for attending today. This comes with instant course access, detailed instruction, and we're going to give you all the entries, exits, and stops. We're not just sharing with you high probability environments for a setup to take place. We're giving you all of this. We're telling you exactly where to enter, where to exit. We're giving you all these different variables so you can pick and choose and pick which one best suits your own needs. Included with this, we're giving you the PET D. So the PET D can confirm all of your candlesticks and confirm all of your setups with this particular strategy, strategy number 5, all right? We're also including all the add-ons, both the add-ons. So you will get the buy and sell signals, indications for a strategy number 5 setup. You will also get the add-on for the PET D, which will automatically color your bars green or red, all right? And lastly, you're getting signal alerts. All right, by signal alerts, once you understand the philosophy behind the course and once you feel it, we see that through my mentoring, you're really understanding the process, we start providing you with email alerts on a nightly basis when signals occur so that you can know what to look for. Here's an example of something that just happened when we're talking about signals. This is for all the members in our course. This was just a few weeks ago. An email alert was issued on the 30th of March here, as you can see. Now I want you to see we circled Apple because Apple was a strategy number 5 setup to go long Apple. Now as we look here, Apple was basically going a little higher than it seemed like it was rolling over, but it was met by this nice strong upward move, and strategy number 5 generated a buy signal on the 29th for entry on the 30th. Now obviously if you're a more aggressive trader you could have entered on the 29th, but the standard format is to enter the next day, and that's not just enough to take the trade. Even though it's a bullish engulfing pattern plus 1, 2, 3, 4, 5, 6, 7, I believe, we want to confirm it with the PET D. So this is the beauty of what we're offering you today. We're also including the PET D, and had you had the capability to add that, you would have seen that all of the bars, not one of those bars had ever turned red. In fact, they were all still green. So this was giving you the confidence to take the trade, and Apple went up 5 points in the next 4 days. So this was actually sent to our members just roughly a week and a half ago. This is what you will receive, these educational email alerts as you become a member of this course. And then lastly, the most important thing you're getting with this, included with the strategy, with the PET D, with all the entry, exits, and stop signals, with all the alerts, with all the add-ons, the most important thing in my opinion is you're getting 40 years of experience. You're getting a mentor who's been trading these techniques for nearly 40 years, and you're getting lifetime correspondence with me. So it's not just something we're throwing at you and saying good luck, just watch the videos as often as you can and hope you get it. You're going to have lifetime correspondence with me as long as you'd like, as long as you want. Any question you have regarding this candlestick combo, or anything else concerning you about the market, you can always email me and I'll get back to you just as soon as possible, okay? Lifetime correspondence, because now you are a student and a member of Specialist Trading for Life, okay? Here's the special we're offering for all the attendees today, so you can come on board. You can get our discount of a flat fee of $14.95 plus $97 per month, okay? This includes everything included, $14.95 plus $97 per month, but this is for a limited time only. Now, if you'd like to just buy the whole enchilada and not have to worry about $97 per month, it's a one-time fee, limited access though, but a one-time fee for both courses for $29.95, okay? Now, the best thing is that Pro Trader Strategies, if you want to get that $29.95 deal, they will also work with you and with a payment plan. So here's how to get this great deal before the prices go back up to their standard, roughly thousands of dollars more price. Contact Pro Trader Strategies. There's their email address. That is their phone number. You can contact them and speak to someone and talk about a payment plan. And as you can see at the very bottom, there is the Candlestick combo link. The combo meaning strategy number 5 along with the PET D. Now that is not a live link. You have to copy and paste that onto your browser. But if you look over in your chat box on the far right, they have posted a live link in the chat box. So all you have to do is click that on and it will automatically take you to the sign up page. But once again, if you want to put together some type of a payment plan, if you'd like to do that and get the entire course, without having to worry about $97 a month, you can also do that with a payment plan. Just contact Pro Trader Strategies and they will set that up for you, okay? I'm going to leave all this information up here so you can copy it down or contact them while I open up the question and answer box. And thank you, first of all, for holding off on any questions. And let's go to one in Alabama. It says, how accurate is this system? Well, once again, this isn't a system. I don't know if you came in late, but as we said, we do not teach or trade systems. Systems basically tell you that you must trade the same exact way each and every time, regardless of the market environment, regardless of what time frame you're trading. Everything has to be done the same way. I do not like systems. I used to trade them. I used to teach them, but I do not like systems anymore because basically all they do is they take you out of the game. They turn the trader into a robot where he's just manually entering orders, and you basically have no inclusion within the process. I have found in nearly 40 years that the only way one becomes consistent is by becoming a part of the process, is by making your own decisions, and systems don't allow you to do that. So, there's no way we can say how accurate this is because everyone trades it differently. I have people that trade this candlestick combo on minute charts. We also have students that trade it on currency pairs on monthly charts. There's just a number of ways to trade it, different time frames, conservative, aggressive styles, different exits, different entry points, and we teach you all of this in the course. So it's up to you. There's just a million and one ways, and there's no way we can statistically keep numbers on each and every way, okay? Let's see here. This is a wonderful insight a market can reveal. Thanks. You're more than welcome. Remember, once again, you can start using that +1 tool right away. This will greatly increase your odds for bullish and bearish engulfing trading. But if you really want to increase your odds even more, get the PET D to confirm it. Remember, it's not just enough, as I showed you, to look for +1 or +10 setups, because every once in a while they will fail. So you want to confirm it with the PET D, as we showed you in that Oracle example where we had a bearish engulfing pattern +3, I believe, and you would have taken that, and then the stock went straight up because it wasn't confirmed by the PET D. So many times the PET D, the best trades are the ones it keeps you out of. Gerhard, hello Gerhard, is saying, thanks for the excellent presentation. I bought the PET D in 2014. At that time, it was not for candlesticks. Can I display the PET D as well, or did you develop a PET D to be used with candlesticks? Hi, Gerard. Yes, you know, it doesn't matter. There's nothing extra you have to purchase. It's just a formality in terms of how you set your candlesticks up. And, we have an excellent tech support department. If you contact your personal trading consultant, they can steer you in the right direction and show you how to do that. But there's nothing else you would have to purchase. This is not an extra sale just because we're now initiating the PET D with candlesticks. It's just a way of formatting them, which we'll show you how to do for free. Okay, so no worries about that. You'll be able to up and run quickly by simply applying these a couple of differences in your charts. Okay. Nick asks, hi Nick, he says, does this work better or worse if you use the 50-period simple moving average with this method? That's a great question. The 50-period moving average is another technique and tool we use simply to tell you what the overall trend direction is. Now that basically, without giving too much away, is a way to trade more conservatively. So if you want to apply the 50, you're basically going to be taking yourself out of a lot of trades, but you're going to be a little more consistent because you're more conservative. All right, so it's up to you. You can apply the 50 you want. You don't have to, but a number of our students like to apply the 50 to tell them what side of the market to be on. Let's see. The next question is: will the PET-D perform or will it perform a thinkorswim charting software, or will it be applied? Yes, it does work with thinkorswim, but we have a few small alterations you must make because of the way thinkorswim is formatted. We can't plot the PET-D and strategy 5 on there because of the way they've designed it, but it's a simple thing to remedy. All you have to do is we take a split of the feed that you're using for the data, and we give you a free NinjaTrader chart platform. And on NinjaTrader, all of our chart techniques and strategies and PET-D indications can be seen on that charting. So we set that up for you entirely for free. So what you can do is you can just simply split the data feed from thinkorswim while you're still looking at thinkorswim. Just use that also on a NinjaTrader platform, and you'll be able to see everything. Once again, we have a great tech support department. They set that up for you entirely free, so there's nothing you have to do. Okay. Ori is asking, is this being recorded? Yes, Ori, this is being recorded. But remember, if you want to get that special deal with any payment plans, I strongly urge you to take advantage in the next couple of days. You know, a lot of people like to watch the recording for weeks before they decide, well, you know what, this is really good. I think I'll buy it. But by that time, the discount has already gone and we're moved on to something else. So I would request a recording and watch it. And then if you're serious about coming on board and taking your trading to the next level, contact the good people at Pro Trader Strategies very quickly, and they can still set you up with those great discounted deals, okay? Nick is asking, is this method mainly a reversal method? No, Nick, it has nothing to do with reversals. We're not concerned about reversals. In fact, most of our trades are just basically looking for either pullbacks or directional trend moves. We don't really look for tops or bottoms in anything. And as you saw, a lot of times markets were going higher, as once again in that Oracle example, the market was going higher and it had gone up very nicely, and then you were met with another bullish engulfing pattern +3. So it didn't reverse at all. It continued going even higher. So we're not looking for any type of reversal or any type of trend directional change. Let's see here. Mark says, I live in Canada. Can we use the PET-D here? That's a good question, Mark. It depends on what your charting software platform is. I know there are no restrictions. The U.S. Government does not restrict you against using the PET-D in Canada. It's just mainly that whatever charting platform you have. I would contact Pro Trader Strategies since they deal with that. I simply deal with the educational part of the company, but they deal with all the tech support and the application of the programs, and they will be able to answer your question. But once again, there's thinkorswim is not something that we can apply this to TradeStation, Metastock. Both of these programs work in NinjaTrader. They also work in MT4, Sierra Charts, and so it's not just thinkorswim. There's a number of different charting platforms that you can apply strategy number 5 as well as the PET-D to. Okay, so in other words, our candlestick combo, which we're advertising today. So there's lots of different platforms and FCXM as well. So contact Pro Trader Strategies and they can steer you in the right direction or provide you possibly with something that will work for you in Canada, okay? Now remember, once again, in conclusion, if there's anything I can leave you with, it's that 80% of all traders fail, okay? And when I say fail, I'm not trying to scare you. I'm not saying that most traders go into a small loss. By failing, I mean that they lose all of their nest egg for trading, all right? I was almost there, so trust me, I know all about it. It's very discouraging. It's very frightening because to think that, well, you're either not going to be able to trade at all or it's going to be a long time until you are able to save up some funds. Now, it's my opinion in nearly 40 years that the reason why most traders do that, myself included, I almost got there, was because you are relying on an outside source to tell you what to do. Think of it. Look at your own trading. Is every decision you make governed off of someone or something telling you what to do? Do you go into a chat room looking for signals or looking for someone to, to tell you that something's hot or something's not? Do you watch guys on TV telling you what stock to buy? Do you wait for news events to tell you whether it's okay to buy or sell? Do you look at the volume or what the institutions are doing to tell you what you should buy or sell? These are all outside things, or what my mentors called noise, that really have shown no levels of consistency. And this is what I followed, and it didn't make me a dime for the first 2 years of my trading career. It wasn't until my mentors told me to let go of all that and strip it away and just follow what I'm seeing in the chart in front of me, that's when I started to become consistent. They started sharing with me all these different trading techniques and tips and strategies that I share with all my students and you as well in my webinars. So this, in my opinion, is the way to become consistent. If you're having trouble with your consistency, if 2016 is nowhere near where you thought it would be, and we're already in the first quarter, and if you're really already struggling in this beginning of this year, come on board. This is a great candlestick combination. I will be your personal mentor with nearly 40 years of experience. I'll be there with you every step of the way, okay? Remember, contact Pro Trader Strategies. They can get you involved with that discount as well as payment plans, and you can be up and running in just a matter of moments. Thank you so much for attending. In closing, I want to say thank you once again, and I look forward to all of you becoming students of mine and members of Specialist Trading and of the Candlestick Combo. Have a great day. I'll see you next time. Bye-bye.